Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. In today's presentation, we are going to discuss why there is an increase in volatility in forward premiums and how it affects exporter and importer. In the second part of the presentation, we will discuss what is the outlook for dollar rupee pair. Every week, we share some concepts related to economy, which is very important for exporter and importer. Apart from that, it is equally important for all aspiring MBAs, research analysts, economists, and CA. I will request all my viewers to share the video with them so that they can learn from real life situations. Coming back to the presentation, volatility has become the new normal for USD INR pair. Earlier, there was volatility only in spot market. Now, from last 2 months, we can see volatility in forward premiums also. So, for example, on 28 May, 1 year forward premium were close to 3 rupees 82 paisa. On 4th June, the forward premium have fallen down to 3 rupees 15 paisa, a fall of 67 paisa in just 4 trading days. Before we understand why forward premium have fallen, let me explain you how RBI intervenes in the forex market. So whenever there is an inflow of dollars in the market and RBI wants to stop rupee appreciation, so they will intervene in the market. How they will intervene? They will buy dollars from the market. They will buy dollars from the bank. So whenever RBI buy dollars from the bank, they will give rupee to the bank. So when banks will have rupee with them, the rupee liquidity into the system will increase. So whenever the rupee liquidity into the system increases, there is a chances that inflation can increase. So RBI has to manage both the things at the same time, rupee appreciation and inflation. In order to do that, what they have done from October 2020, they have started intervening in the forward market instead of spot market. So from October 2020 till April 2021, they have bought forward worth $73 billion. Now, when they have bought forwards, they were able to manage inflation and rupee liquidity into the market. But by buying forwards, premiums have shoot up from 3.5% to 5.5%. And whenever the premiums shoot up, RBI has to incur that cost. They were paying to the market 5.5%. It was directly impacting their balance. So it seems that they have decided not to roll over the maturing forwards. So instead of rollovering, they have squared off their position by selling the forward, and hence because of selling pressure, the premium have fallen. So now let us understand how does falling premium affects exporter and importers. First, as there is a change in RBI stance that they will not intervene in the forward market, they will intervene in the spot market. Now the premiums will be at a lower level. It will trade in the range of 3.5% to 4.5%. Second, as the premiums are lower, there are high chances that rupee can depreciate in coming days. Third, there will be volatility in premiums every month. So I will request all my clients that whenever they are taking rates, they should verify from our interbank screen. So now let us come to the final part of the presentation, that what is the outlook for dollar rupee pair in coming days. On the positive side, we have seen some amount of inflow coming in the Indian equity market, and because of lesser number of coronavirus cases, major part of India are reopening. On the negative side, in current RBI monetary policy, RBI clearly said that growth will be lower in coming days and inflation will be higher in coming days. On the global part, we have seen that dollar index have risen from 89.30 level to 90.15 level because of better US economic data. Chinese currencies have also started depreciating from 6.36 level to 6.40 level, and US 10-year treasury yield is also increasing. These all factors will keep pressure on dollar rupee pair for coming days. So for the coming week, we expect dollar rupee to trade in a range of 70 to 70 to 73.20 levels. 70 to 70 will act as a strong support for the pair, and 73.30 will act as a strong resistance for the pair. If 73.30 is broken at any point of time, then dollar rupee pair will immediately move towards 74 to 74 and a half level. The bias for the dollar rupee pair is on the depreciating side. So in the short term range is 70 to 60 to 73.20. Medium term range is 72 and a half to 74 and a half. Before we end, let me end with a thought. No matter how you feel, get up, dress up, show up and never give up. जय हिंद, नमस्कार, फिर मिलेंगे.